Good afternoon, everyone. Happy Tuesday. Hope everybody's doing well. All right. Let's get right into it, everybody. Hope everybody had a great weekend. And coming in, first thing, so this is Gabe Velazquez here with transportingsolutions.com. We got a bunch of links below. We have a class coming up. We have a class coming up that I think is going to be really interesting for a lot of you. Especially if you're struggling with your trading. The class is called Gaining an Edge. And the first thing I would ask people is, do you have an edge? And if they look at me kind of quizzical and, like, what the heck is this guy talking about? Then there's a problem, right? If you don't even know what an edge is in trading, that can be a problem. Yep. Right, Dennis? I've actually had that. I ask people, you're a trader. Oh, do you have an edge? And then they kind of look at me like confounded, like, what the heck is he talking about? Right. So therein lies a big problem. So yeah, you got to have an edge in trading. Everybody's out to do the same thing. Everybody's out to make money, but only a few do. And so you have to understand how the markets work. So in any event, that's coming up on Thursday. So if you want to go ahead, it is free. It's going to be at 11 Pacific. Okay. All right. So let's get into it. I was with you on Friday, and interestingly, we talked about the NASDAQ. I think one of the things I kind of mentioned about the NASDAQ basically failing to take out, the CPI high. And interestingly, if you look at how the markets have traded, basically for the last 2 days, 2 trading days, or Sunday, concluding Sunday, right? We had Sunday opening futures. Remember, I spoke about the 13,700 distribution area in the NASDAQ, right? 13,700. Again, everybody pull up your charts. If you don't have your charts up, as you know, I'm going to basically give you guys the levels, and you yourself will have to look at your charts. I'm not one of these to show you trades after the fact. Oh, look at how great this worked, that worked, and all that good stuff. I mean, that's not the way I operate. So that's not real. But I think it's actually more educational for you to actually look at your charts and kind of go along with me. Okay. All right. So if you take a look at let's start with the NASDAQ, because I think that's really, really important. That 13, you really, if you just look at your chart on a 8 or 4 hour time frame, you can actually see a based drop in there, right? Not anything that you guys haven't seen before. And why is that important? Because that is where the market is struggling to get through at the moment. So as we struggle through that level, 13, basically, I think I gave you guys this level last week, 13,700 to 13,788.25, right? Hey, Gallo, how you doing, my friend? Hope you're doing well. Yeah, that's a little bit higher, Dennis. But notice even today, we came in there. I don't know if you guys were watching the market about an hour ago. We actually came in there yesterday, fell away. We came in today about an hour and a half ago and fell away, right? And so clearly there's some sellers there. Tomorrow with the Fed minutes, that's another key. Tomorrow at 11 Pacific, 2 Eastern, you get Fed minutes. I think that's going to be a market mover. Yep. Today's the doji. Yeah, you know how I feel about those, Dennis. What is it? Doji, hammers, candle. What is it? Shooting stars and all that jazz. What do you light a fire with those, right? Is that what the candles are for? I'm just kidding. Right. Anyways, I'm just joking with you, Dennis, right? But you know how I feel about all that stuff. Anyways, that doesn't give you an edge. But in any event, yeah. So pretty much we are exactly where for the most part where we were on Friday when I was with you again. Like the 4,300 on the S&P, right? I gave you guys that level on Friday. Where did we end up today? 4304 and a half. Again, a false break this morning. Looked like the market was off to the races again, and then again stalling out. So we're in this transition phase right now. Again, the debate rages on whether, and again, you guys know I'm not a big. What happens when you start labeling the markets, and this is what I'm going to talk about in my presentation on Thursday. This what gets people to lose money is, oh, it's a bear market rally, so therefore I should be shorting. And how's that been working for you for the last 4 weeks? Because the sloping moving average is down, I shouldn't be buying, and so on and so forth. Correct? I know it runs counter to what you all think and whatever, and but that's the way it is. So rather than do that, as you know, I am a big subscriber of exactly Gallo. Well, yeah, uh, yeah. Well, again, all those internal market dynamics. I'll talk about that on Thursday. You want to join us, Gallo? It's free. Okay, so I'll have all that for the free class. Okay, I'm going to talk about a bunch of that stuff. So, in any event, moving right along, in a nutshell, and I don't think we have to really belabor this too much longer, is look, at the end of the day, buying low and selling high is still in my 30 years of doing this now is it's almost like so the way let me kind of frame this in a different way. um, can the conventional stuff work sometime? Absolutely, no question about it. But what I kind of I kind of compare it to is the casinos. Does somebody have to win sometime in the casino? Yes or no, everybody? I got a 30-second delay, so I'll wait for your response, right? You get my point. So when you look at all these different things, there's always a winner in the casino. Why? Because if there weren't any winners, you wouldn't keep coming back. Correct? And so my point is, some of this stuff does work on occasion, right? Fernando and you guys, right? Trina, nice to see you. You're new to the channel, I believe, right? Everybody, please also to support the channel. Give me some thumbs up, subscribe to the channel, put some comments down there, and so on. Yep, welcome. Uh, and by the way, I actually have some links. If you want to contact me directly, you can contact me at Transparent Trading Solutions at gmail.com. Okay. If you want, just, bypass any of that, just contact me directly, or you can private message me on Twitter. I also have my Twitter down there. So you can do that as well. And I am available for everybody if you want some one-on-one discussion as well. Okay. I'm going to be doing some special things coming next week for you guys as well. So, okay. All right. So, now that I get all that out of the way. So in a nutshell, everybody, yep. We are in a transition phase, everybody. Still, again, whether this is a new bull market, whether it's a bear market rally that's going to fade, who cares? If you went long when I was in my newsletter, again, if you were subscribing to the conventional, oh, it's a bear market rally, we're sloping down, moving average and slow, you missed about a 20% move in the S&P and actually about a 17-18% S&P move to the upside, and also a huge move in the NASDAQ, correct? So now where are we at? Are we looking to short the market? I believe we are getting, again, as I wrote in the newsletter this weekend, I do believe the risk to the upside is getting In other words, going long here is riskier, as you found out earlier today, right? If you're chasing this market right here, now, am I opposed to buying this market? Of course not. I want to buy the deep pullbacks in any market because I want to buy low and sell high, right? Yeah, exactly, JT. Yeah, it's getting frothy and it's VIX under 20. I keep talking about that. We're getting into the seasonal period. Now, does that again necessarily mean we can't move higher? Of course we can move a little bit higher, but you can see even in today's action, that 4,300 still a little bit of a challenge. The NQ right at that keeps struggling. And by the way, the Nasdaq is still underperforming. Remember, I've been talking about this. Nasdaq. I talked about this on Friday. We can, and by the way, what's driving most of the Nasdaq? Can somebody? I'm going to ask you as a question. What is driving? What's the primary driver of the Nasdaq at this point? Question. Let's see if some of you guys have been. No. Well, kind of. iPhones. Interest rates. Next few days, do me a favor, you guys. Put a chart of the 10-year, right? Yeah. No. Put a chart up of the 10-year and side by side against the Nasdaq. And check it out if you don't believe me. Yep. So interest rates. Absolutely, Dennis. Yeah, but that's the biggest. That's the 800-pound gorilla of the Nasdaq 100, is it not? But by the way, how's AMD doing? How's TSM doing? I can go on and on. Correct. So, by the way, is that going to drive the market higher with one stock pushing the whole index? What do you think? So, anyways, okay, all right. So let's recap. Now I have a new level for you, so you can see the again. Write this down or check out your charts, and we're gonna move on because I got other stuff. I only have a half hour, so. Again, on the 13,700, 13,780, we still can't even get through that. So first things first. Now on a pullback on the Nasdaq, right? If you look at your charts, there's a nice little level right around 13,400 for a pullback. Correct? So check that one out. And I'm not going to give you any specifics because I can't give you advice, but just look at your charts. I'm putting out about 2 or 3 trades every single day for our members. I just got off. I did about 6 or 7 situations with our members, like I used to do, right? Just put them out there and you guys choose and whatever. So we just did that with our closing session and our members. Okay, all right. So that's that. And the S&P. By the way, the S&P has got to get through 4,300, and there's a level about 100 points away. Also, distribution. That is also something that we're already keyed in on, right? Also interesting, I think I gave you guys a level in the Russell. By the way, if you haven't been looking at these levels that I've been giving you, just freebies here on YouTube, which I'm going to do a lot more, right? I got something special coming up for you guys tomorrow, right? You got nothing. Let's see. I got nothing. Yeah. Well, no, there's actually a little level in front of that, which I'll let you find. Yeah. Look at the Russell too. The Russell just hit a level too. 32, 50, 40, 50. Yep. Okay. All right. So that's that. And again, tomorrow, just make sure you understand tomorrow, right? What's going to happen tomorrow is going to be a huge market moving event, right? So we are going to get some volatility across all of the markets. You're going to get probably dollar. We got dollar, bonds, equities, of course. Interesting. You mentioned Fernando. You mentioned oil. Can you also ascribe the move to the upside this morning with a drop in oil? Right. So could you also, let's say, oh, oil's dropping, stocks are probably going to go up. Correct. Yeah, I don't have anything in oil till in the low 80s, Fernando, for a buy, and I am going to look to buy. And remember, I mentioned to you guys USO the other day. So I'll probably take a longer term position in USO with options. But if you're interested in the futures contract, it's been very, very choppy lately. We basically just broke 87. Remember, I've been talking about 87. We actually hit 87 a couple times, rallied. We had a strong rally up to about 92. I had actually some levels up top that didn't quite get there. But now that we broke 86, I think we're probably going to go down. I would suspect we're probably going into the low 80s. Okay. And I am looking at putting on some USO if we get there, because over the long term, if you look at your long-term chart of oil, versus the short term, I still think the fundamentals in oil are still very bullish. And again, remember what I said the other day, short-term markets trade on perception, but long-term fundamentals always will be reflected in the price. Keep that in mind, right? And so that also keep that in mind. So if you're a short-term trader, you could say, well, I ignore the fundamentals. But if you're a long-term trader, you shouldn't ignore the fundamentals. Look at nat gas as an example, right? If you ignore the fundamentals on that thing, and I've been talking about that, correct? In fact, since we're on energy, nat gas looks to me like it's poised to break 975 on nat gas. Extremely volatile. And remember, just if you are uncomfortable trading in the nat gas futures contract, that thing's swinging $5,000 a day, right? If you guys have been watching it for the standard, 10,000 MBTU contract, right? There's always, UNG, which I look at a lot with options. UNG. If you don't know what that is, that's the ETF that tracks, and that's only a little. It's gone from 22. This last run up from 5.5, 6 to it went from like 25 to 32. And it's not bad. If you want some leverage, you can go to BOIL, BOIL. I think I mentioned that the other week, and so on and so forth. Okay. So if you want more leverage, BOIL is the long. But I would not chase nat gas at this point. All right. I would wait for some kind of a pullback, and we may have another blow off like we did the other time. Remember I mentioned a blow off at 9.5, and it actually traded all the way down to 6. So we could be in that situation again. So I would be very careful right now. We're in that tricky area in nat gas, everybody, where you don't want to chase it to the upside, but on the same token, you still clearly you don't want to short it, right? So there you go. Okay. All right, let's move on because I only got 10 minutes. Dollar's just been range trading, and I think I continue to focus on just a couple of currencies. Dollar just came up again. Look at your 8-hour daily chart of the dollar index. You can see it's basically held at 105, 104.50 daily accumulation, and we just hit resistance at 107. Came back down again. It's been basically just range trading, still fairly strong. I'm still focused primarily on the yen. Yen has had some really tremendous moves. In fact, I have a couple of levels on the yen I'm looking at right now. Accumulation and distribution, because it's now looks like it's in a big broad range. Also, Canada looks pretty good. Check out Canadian dollar. And also, we got New Zealand coming out tonight with their rate announcement. So all the calm dolls are actually doing pretty well. But I would, again, if you look at the euro, that's just been range trading, nothing there. British pound, nothing. Even Swissy, kind of, but not really any great levels there. So again, just to sum it up on the currency side, the primary one, yen, clearly you check out your chart, you can see tons of movement in that one, which is what we want as traders. And the peso, by the way, peso's also been pretty good. And then now I'm incorporating Canadian. If you check out your Canadian and your Aussie, your calm dolls, they're starting to move. I believe they're starting to move because of obviously with nat gas and oil and the grain markets moving. It's actually providing some volatility in those two markets. Okay, all right. So those are it there. Bonds, still look at your 10-year. And by the way, you have to look at your 10-year. Right now, I still believe that interest rates are the dog wagging the tail. And I can tell you, if like this morning, bonds were selling off and you saw the market kind of selling off and then bonds recovered and then you had a recovery. If we had a big bond sell off in the next, maybe tomorrow after the Fed minutes, that's going to put pressure on stocks. So keep an eye on the 119 level in the 10-year. It's been very strong level of support. So check it out. And also, if you look at the pattern forming in the 10-year, you can see that there's the recent sell-off in the 30 and 10-year have left some really high quality distribution, which now implies that we're probably going to get lower prices in the bonds, i.e. higher yields, which will also be detrimental for any significant upside in stocks. Okay. So, but you just never know. You got to rely on the charts. Okay. All right. Last but not least, grains. You guys know I love the grain markets, even though I don't eat. I'm gluten free. I'm just kidding. I don't actually eat a lot of carbs. I don't. So it's it right, but it doesn't matter. Yep. So soybeans, interesting, still has a gap around 14. Keep an eye on that. In fact, grains have been all over the place, but some really nice moves, right? I don't know. How many of you guys in here trade grains? Anybody trade? And if you don't, you should. They've got some nice mini contracts, 1,000 bushel contracts in both. I wouldn't touch the wheat on the mini contract, but corn and soybeans have some nice 1,000 bushel contracts that can be a little bit more palatable, if you will, on the risk side of things. Okay, so check it out. So we got wheat. Soybeans. I am looking at soybeans have had some really nice movement. If you're so inclined to trade that. So we do have this gap around the 1350-ish area. There's a level I'm looking at in front of that also in soybeans, and that could actually hit tonight. And then corn around the, again, there's some gaps to fill in corn, and it had a really nice level around 650 that I think I mentioned to you guys the other day. In corn. So if you haven't traded grains, check it out, obviously at your own discretion and with your own specific risk. Okay. All right. So to wrap things up, everybody, again, thanks for joining me. Again, if you want to contact me, you guys have all the links below, the email, the private message on Twitter, whatever you want to do, or you can contact support at Transparent Trading Solutions. I have that class coming on Thursday, if you guys want to sign up for that. But yeah, so all in all, Again, lots of choppy trading right now in the indexes. He's doing great. Yep. Yep. He's doing great. Yep. So we we have the Fed minutes tomorrow, which could break us out again. So I would just say the way the market's been acting for the last 3 days, it is in a consolidation phase. And could we go? Could you point to this being a consolidation with the next move going higher? Of course. Um, and I would not be surprised, but I think it's all going to be predicated on tomorrow's Fed minutes and also on the bond market. So that really is the key going forward as we move into Jackson Hole, which is 2 weeks from now. That's going to be also big, and then into the September. By the way, September is when they actually start the quantitative tightening. I don't know if you guys know that. That still hasn't filtered into the system either. By the way, the rate hikes and the Fed tightening hasn't really actually filtered all the way through in the system. So it's going to be interesting to see. That's why I think September is going to be a little rough, but who knows? Got to rely on the charts. Okay. All right, everybody. Have a great rest of your week. I'll see you on Friday. No, it's starting in earnest on in September 1, Dennis. They're actually going to start rolling off a lot of the bond purchases and so forth. So, okay, all right, everybody, have a great rest of your week, and I'll see you Friday at the close, and we'll kind of wrap up the week and see how you guys did. Okay. All right. Take care, everybody. Have a great rest of your week, and I'll see you on Friday. Take care.